Ever feel like success is a mystery? Like some people just have that, I don't know, magic touch. Well, today we're going to dive deep into the world of one of the most successful investors of all time, Warren Buffett and his company Berkshire Hathaway. Specifically, we're going to unpack his latest letter to shareholders. Now, I know what you might be thinking. Shareholder letters. Sounds boring. But trust me, this one's different. Buffett's been incredibly successful at investing for over 80 years, and his insights are surprisingly relatable. He even uses his sister, Bertie, as a stand-in for the average investor, someone like you. One of the first things Buffett tackles is how he thinks about earnings. You see, he doesn't trust those official net income numbers. He actually says they're worse than useless. Instead, he focuses on operating earnings. So what's the difference? Well, the official numbers include unrealized gains or losses from the stock market, which can swing wildly from day to day. Buffett argues that these swings don't reflect how well the businesses Berkshire owns are actually performing. He's more interested in the actual cash those companies are generating. Their operating earnings, so to speak. This focus on real cash flow. It's a great takeaway for you no matter what you're investing in. It helps cut through all the noise and focus on the true earning power of a business. And that brings us to Buffett's overall investment philosophy. He looks for what he calls wonderful businesses, companies with strong long-term prospects that can reinvest their profits wisely. Think Coca-Cola, American Express, companies Berkshire has held for over 2 decades. These businesses, they're built to last. They sell products people need, have strong brands, and generate tons of cash. The key takeaway: when you find a truly great business, stick with it. Patience is definitely a virtue in investing. But here's the thing. Berkshire's so big now that finding companies to buy is like trying to turn a battleship. So how does Buffett find those hidden gems? Well, he has a not-so-secret weapon, waiting for market panics. When fear makes other investors irrational, that's when Berkshire's massive cash pile comes in handy. It's like they're always ready to pounce when everyone else is running for the hills. Remember 2008? While the world was panicking, Berkshire was buying. This really highlights another one of Buffett's key principles: avoiding permanent loss of capital. He doesn't just want to make money, he wants to avoid losing it forever. Think of it this way. Imagine playing a game where you can win big, but if you lose, you're out forever. Would you take unnecessary risks? Probably not. That's how Buffett approaches investing. It's all about protecting what you've earned and being ready to capitalize when opportunity knocks. Now, besides those classic holdings like Coca-Cola and American Express, Buffett also sheds light on some newer bets Berkshire has made. One that stands out is Occidental Petroleum, an oil and gas company. What's interesting is that he seems particularly impressed with Occidental's CEO, Vicki Hollop, and her expertise in oil production. He also mentions Berkshire's growing stake in 5 large Japanese trading companies. These companies are diverse, shareholder-friendly, and potential partners for Berkshire on a global scale. It looks like he's found another group of companies that align with his preference. For businesses that prioritize shareholder value and reinvest profits wisely. Of course, it's not all sunshine and rainbows in Berkshire's world. Buffett also talks about some unexpected challenges the company faced in 2023, particularly with BNSF, their massive railroad company. You see, BNSF plays an essential role in the American economy, but owning a business like that comes with a hefty price tag. They need to spend billions each year just to keep the trains running. This means that even though BNSF is profitable, they may not be paying out huge dividends, because that cash is going right back into maintaining the tracks, locomotives, and all the other infrastructure. This is an important reminder for any investor. A company's dividend isn't just about profit, it's about how much cash is left over after reinvesting in the business. Something to keep in mind if you're looking for income from your investments. And it's not just about the financial challenges, but Buffett also touches on a sensitive topic: the reality of train engineer suicides. It's a reminder that behind those earnings reports and stock prices are real people facing real challenges. On the utility side of things, Berkshire Hathaway Energy has been struggling with a tough regulatory environment in some states, and this has Buffett worried. He thinks it might make it harder for utilities to attract the investment they need in the future. What's interesting is that Buffett, a staunch believer in free markets, is basically sounding the alarm about too much regulation. He's suggesting that if private utilities can't earn a fair return, they might end up being taken over by the government. It's a subtle but important point about finding the right balance between regulation and allowing businesses to innovate. Hey, let's not end on a down note. Remember how I mentioned that Berkshire's insurance business did exceptionally well in 2023? Well, this is a big deal because insurance is a bedrock of the company's success. It's been a core part of their business for over 5 decades. And Buffett highlights the incredible track record of Ajit Jain, the head of Berkshire's insurance operations. He drops a great piece of wisdom here. He says, Our underwriters can't be optimists at the office. Why? Because in insurance, surprises are almost always bad news. You need people who are realistic about risk, who can assess it accurately, and who are prepared for the unexpected. It's not about hoping for the best. It's about managing risk effectively. Now, I know we've covered a lot, but there's one more intriguing piece of Buffett's letter we need to unpack. A phenomenon he calls the Omaha effect. He points out that he, Charlie Munger, his longtime partner, and several key people in Berkshire's history all have strong ties to Omaha. Even his sister, Bertie, the model for the average investor, developed her savvy approach to investing in Omaha. So what's the secret? Is it something in the water, the air, or is there something about Omaha itself that fosters this kind of grounded long-term thinking? I guess we'll have to wait and see if AI can solve this mystery. Welcome back. Before we dive back into the specifics of Berkshire's businesses, I want to spend a little more time on Buffett's sister, Bertie. Remember, he uses her as a stand-in for the average investor in his letters. And her story is a perfect illustration of how you don't need to be a Wall Street whiz to be successful. Bertie actually started investing pretty late in life. She dabbled in different things, bonds, mutual funds, stocks. But it wasn't until she was 46 that she really hit her stride. And her strategy, remarkably simple. She put some of her savings in Berkshire Hathaway,
some in a mutual fund, and then just sat tight. For the next 43 years, she made 0 trades. And guess what? She became very, very wealthy. Really struck by how Bertie built her wealth. It wasn't about complex strategies or timing the market. It was about consistency. What do you think of her approach? Does it make you rethink your own investing habits? And here's the kicker. Bertie developed this common sense approach while living in, you guessed it, Omaha. It adds another layer to that Omaha effect. Maybe there really is something special about that place. Even Buffett jokes that we might need to wait for AI to figure it out. But whether it's the environment or just a bunch of smart people in one place, there's no denying that Omaha's played a big role in shaping the investment philosophies of some of the world's most successful investors. Speaking of success, Buffett includes a table in his letter comparing Berkshire's performance to the S&P 500. And let me tell you, the results are pretty impressive. Over the past 59 years, Berkshire has averaged an annual gain of 19.8%. The S&P 500, only 10.2%. That's nearly double the return. Now, I know past performance doesn't guarantee future results,
but this long-term track record, it really speaks volumes about the effectiveness of Buffett's approach. Okay, let's shift gears back to some of the specific businesses Berkshire owns and how they performed in 2023. We've already talked about the challenges faced by BNSF and Berkshire Hathaway Energy, but remember, Buffett also highlighted the incredible performance of their insurance operations. This segment was a real bright spot for the company in 2023. He really emphasizes that insurance is a bedrock of Berkshire's success. They've been in the game for over 5 decades, and despite their massive size, there's still room to grow. It's a testament to how enduring the insurance industry is and how skilled Berkshire is at navigating its complexities. What's particularly impressive is that Berkshire's insurance success isn't dependent on just one person or one market condition. They have a deep bench of talented executives spread across their various property and casualty operations. Buffett even compares them to baseball Hall of Famers. It's a true team effort built on expertise, discipline, and a long-term outlook. And don't forget that crucial lesson from Buffett about insurance underwriters. They can't be optimists. Remember, in insurance, surprises are rarely good. You need people who are realistic, who can assess risk accurately, and who are prepared for the worst-case scenario. It's not about hoping for the best, it's about managing risk effectively. But beyond the numbers, Buffett's letter gives us a glimpse into something special about Berkshire Hathaway, its culture. He talks about the loyalty and longevity of their managers, many of whom have been with the company for decades. These aren't people who jump from job to job chasing a bigger paycheck. They believe in Berkshire's mission and values. And that kind of stability. It's invaluable. And it's not just the managers. Buffett emphasizes Berkshire's commitment to treating their employees, communities, and suppliers fairly. It's a great reminder that business success doesn't have to come at the expense of ethical behavior and social responsibility. In fact, I think it's the opposite. When a company values its stakeholders, it builds trust and loyalty. And that ultimately leads to better performance in the long run. Now, before we wrap things up,
I want to go back to that table comparing Berkshire's performance to the S&P 500. We already talked about how they've consistently outperformed the market over the long haul. But there's another subtle point I want to highlight. Berkshire tends to do even better when things get rough. Think back to 2008 and 2022. Both years when the market experienced significant drops, Berkshire's losses were much smaller. This really showcases the power of Buffett's conservative approach, his focus on avoiding those permanent losses of capital, and his knack for seizing opportunities when others are panicking.
It's a real testament to the resilience of Berkshire's business model and the wisdom of its leadership. So what does all this mean for you? Even if you're not buying entire companies or managing billions of dollars, there's so much to learn from Warren Buffett and Berkshire Hathaway. It's about having a long-term perspective, focusing on businesses with real quality, being patient and disciplined, and tuning out the noise of the market. It's about understanding that true success is built on solid principles and a commitment to creating lasting value. And who knows?
Maybe we can all find a little bit of that Omaha effect within ourselves, no matter where we live or invest. As you go about your day, think about this. How could you apply some of Buffett's wisdom to your own life and investments? Maybe you could try being a bit more patient, or doing more research before you invest. Even small changes, like focusing on the long game, can make a big difference over time. Remember, it's not about getting rich quickly. It's about creating a solid foundation for lasting financial well-being. Welcome back to our final part of this deep dive into Warren Buffett's world. As we've been unpacking his letter and exploring Berkshire Hathaway, I keep coming back to one central theme. It's all about the long game. It's about making smart choices today that set you up for success, years, even decades down the road. And this long-term perspective really shines through in how Buffett thinks about building a business. It's not just about maximizing profits the next quarter. It's about creating something enduring, something that can stand the test of time. He's looking for businesses that are built on solid foundations, with strong competitive advantages, and a proven track record of delivering value. This reminds me of something we talked about earlier, his love of wonderful businesses. He's not interested in chasing fads or jumping on the latest bandwagon. He's looking for companies that are in it for the long haul, just like he is. Companies like Coca-Cola, American Express, those Japanese trading companies we discussed, they're all playing a different game than a lot of companies out there. They're not focused on short-term gains or flashy headlines. They're focused on building something that can last. And this commitment to longevity really permeates Berkshire Hathaway's culture. Remember how Buffett highlighted the dedication and experience of their management team? Many of these folks have been with the company for decades. They've weathered storms, they've seen market cycles come and go, and they've remained steadfast in their commitment to Berkshire's values. That kind of experience and stability is priceless. But it's not just about experience, is it? It's also about having the right mindset. And that's where I think the Omaha effect comes back into play. Whether or not there's something magical about Omaha, there's definitely something to be said for fostering an environment where common sense, long-term thinking, and a focus on value are the norm. It's about cutting through the noise and distractions and focusing on what truly matters. And that's something that we can all apply to our own lives, whether we're seasoned investors or just starting out. It's about tuning out the hype, resisting the temptation to chase quick wins, and focusing on building a solid foundation for lasting success. So as we wrap up this deep dive into Warren Buffett's world, I hope you're walking away with more than just a bunch of facts and figures. I hope you're leaving with a renewed appreciation for the power of patience, discipline, and long-term thinking. It's about remembering that true success isn't a sprint, it's a marathon. And just like those wonderful businesses Buffett seeks out, it's about building something that can stand the test of time.